Even though it's not the end of the year and it's not tax season anymore, there's still lots of planning and reasons to discuss your finances and taxes. And here are some of the things that you should be thinking about to maximize compliance, maximize your ability to reduce your taxes, and build wealth as effectively as possible. Let's get into it. One of the things you should always be thinking about is how can we maximize our tax deductions? Are you aware of all of the available tax deductions? Most business owners and entrepreneurs never really had the chance to sit down with a tax advisor and really thoroughly understand the definition of what is a tax deduction, what can we write off, and what's allowable. Nor do they really understand how to substantiate these write offs with the proper documentation. Not only that, not only do you want to have good records and be aware of the deductions you're incurring, but also know how can we create more tax deductions? How can we take ordinary events and activities and make them tax deductible, whether they're meals with our family and friends or activities or travel? What kind of actions can we take to take things that we would have already spent money on and make them tax deductible? And that's going to allow you to create tax savings throughout the year, as opposed to some year-end strategies that are also going to reduce your taxes. Another thing when we think about our deductions is obviously depreciation, considering can we buy a vehicle that we can put in the business? Are there any other types of real estate we're purchasing? What's the impact of that? What kind of depreciation can we access by how we're buying different items and assets for our business? Another thing I want you guys to think about that you can start working on now and implementing throughout the year is hiring the kids in the business, right? First 13,500 is completely untaxed by the kids, and you get that deduction up front. And anything you pay them beyond that, it'll still likely be taxed at a lower rate than you. It'll be at that 10% tax bracket, not bad at all, and no FICA tax for the kids. So if you're thinking about this, make sure you talk with your tax advisor and know how to really legitimately and legally do this, and do it in a way that'll create also lots of tax savings. In addition to these strategies with having deductions, also I want you to make sure that you're aware of the capital gains taking place, especially if you have a financial advisor managing your funds for you. We have seen instances where the clients aren't even aware of their stock capital gains until they get their 1099Bs at the end of the year. So if you're going to have some stock capital gains, if you're going to have some real estate you're selling at a profit, you want to be proactive and understand what kind of capital gains strategies can we do before those events take place. That's the best time to talk with an advisor. But also after the events take place, there are still opportunities to mitigate the capital gains on those events through a variety of strategies such as cost segregation, qualified opportunity zones, capital loss netting, tons of other ideas that will give you the opportunity to mitigate or completely eliminate capital gains tax. And also think about where you're pulling your cash from. Are you going to take your cash from borrowing from your business, from your home, and doing a HELOC where you're paying interest back to your home? Maybe that makes the most sense because you're not paying any taxes. Maybe you're in a really low capital gains or a $0 cap gains bracket and you can just pull out some stock. Maybe you're going to borrow from a 401k. All these different decisions of how you want to obtain capital, either to put into your business or into your real estate, are going to have tax implications and may require some additional tax planning. Another thing I want you to think about here is just take some time to really think about and understand how is your business and your real estate performing. Can you put together a quarterly income statement or a monthly income statement? Do you understand what your profitability is? Are your books complete and accurate and up to date? So important to understand the health and the financial performance of your business. And when you understand that and we can make some projections of the potential tax liabilities, we can be more proactive on your tax planning. And one of the conversations we're always having with our clients is, depending on how much income you have and the potential taxation, what kind of entity structures are we going to implement to give you asset protection and to mitigate taxes? And that answer to your question on what's appropriate will become more and more potentially complex and more intricate as your income grows. So these are all different things that we want to be thinking about, even if we're not filing your taxes or closing the year out. So we can help you out with maximizing tax savings and building wealth. Now, I hope you found this talk hopefully useful. If you're interested in learning more, or you know someone who might be interested in talking to us, send them to email info@markperlbergcpa.com. And also, if you know anyone who can join our team, we're always looking to hire wonderful talent as well. Subscribe to my podcast and YouTube page. We're always looking to crank out valuable content, and we look forward to hearing from you soon.